Hello, 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 and welcome to another episode of Freedom Ain't Free. In today's video, we're going to be talking about tax-free income sources and why tax-free income is the best strategy for your financial freedom. If you want to book a session with us and get your freedom number, there's going to be a link that you can click on below. Click a link. We love to set up a time with you to go over your personal financial strategy and get you your freedom number. But in today's video, we're going to be talking about why tax-free income is the best. And I thought it best to start off going through the various sources of income and where that is available from. So first and foremost, let's talk about the various types of taxable income, right? So there are basically 5 types of taxable income available to you here in our country. You may not use all 5 of these individual strategies for income purposes, but we'll go through them all. From there, we're going to transition into some non-taxable sources of income, and then we're going to wrap it up with the bottom line. So the first and the primary source of taxable income for most people comes from earned income, right? So that's income you're going to earn from your job or from your business, or profits from your business, right? So you generate that income in this calendar year. You're going to have to pay tax on that income this calendar year. The second type of taxable income is unearned income. That's income that you didn't earn from working or managing or running a business. It could be interest off of savings. It could be dividends off of stocks, bonds, mutual funds, those particular pieces of the puzzle. But it's money that came to you that didn't have any physical labor attached to it. That's referred to as unearned income. Third type of taxable income would be if you took a distribution from your qualified plan, 401k, your 403b, or your IRA. You retired, or you withdrew some money from those accounts. That's considered earned income, and you have to pay income tax, ordinary income tax on those dollars. The fourth is prizes or gambling winnings, right? So if you're fortunate enough to win that $1 billion prize, the government's coming looking for their share of taxes off of your winnings from your gambling expertise, right? So it is a form of a taxable income if you win, if you get a lottery prize, or if you win anything in the gambling space. And number 5 is canceled debt. So if a debtor writes off your debt, generally anything over $600, they're going to send you a 1099 for that, and that's going to be considered taxable income to you, and the government's going to want to tax you on those dollars amounts, because that would have potentially been profits for that lender, and because that lender didn't get that money from you, they didn't get that profit, the government didn't get their tax, the government still wants their tax. So the lender's going to write it off, and then you're going to get a tax bill. So those are your types of taxable income. Now, here's why that's important. If the bulk of your retirement savings, if you're trying to put that $2 million portfolio together for you so you can generate $120,000 to $160,000 a year, then you're financially free here in America. If you're trying to put that first $2 million together and you're utilizing qualified plans, 401ks, 403bs, traditional IRAs, you're going to have to pay taxes on those dollar amounts in the future. Well, we don't know what tax rates are going to be in the future, but we can trust that they're probably going to be higher than they are currently today. So if I'm building my whole portfolio around deferring my taxes to the future, then I'm going to need a bigger portfolio to be able to handle the tax bill plus what I want in personal financial income so that I can be financially free. What we teach you here at the Freedom Ain't Free channel and at ARC Financial Strategies, how build out your portfolio, but let's put the bulk of it in tax-free income strategies. Then we don't have to worry about what the tax rates are going to be. So next we want to go through types of taxable income. So there are basically 5 types of taxable income. The first one would be a gift. So if somebody gave you a gift, up to the limit this year is $19,000. That would be considered non-taxable income to you, right? It was just a gift, somebody chose to give to you. You don't have to pay taxes on the first $19,000. Anything above that is considered earned income. You have to pay taxes. Next is certain government benefits, right? So if you are experiencing a hard time and you're utilizing benefits through the government, those government benefits would not be taxable. That is not considered income, so you don't have to pay taxes on that. Workers' compensation. So if you were hurt at your job, if you were injured while you were at work, and the insurance company is your bosses, your company's insurance company is covering a portion of your salary while you get better. That is not considered taxable income. You don't have to pay tax on workers' compensation because it's being paid through insurance, right? Number 4 is child support, right? If you are receiving child support, if you're the custodial parent, you're receiving child support from the non-custodial parent. The non-custodial parent is paying the tax, so the government doesn't have to tax that same dollar twice. And so therefore, that's considered non-taxable income. And then lastly is proceeds from a life insurance policy. So if a loved one dies, they listed you as the beneficiary. That money that is received from the life insurance policy is not considered income for the beneficiary, right? So one of the great tools to use to pass on dollars from one generation to the next generation is life insurance. It's life insurance. Death benefits are non-taxable income. So you got your 5 sources of taxable. You got your 5 sources of non-taxable. Bottom line, I want to put ourselves in a position where our $2 million portfolio is primarily being funded by tax-free income sources, right? So there are basically 3 strategies that you can use in order to grow your income and then take those dollars that we've grown and we can move them over and continue to derive income from them in a tax-free way. So the number 1 strategy that you can use is a Roth IRA or a Roth 401k. I did a video about the changes that are coming up in the 401k or in the qualified plan space last week or week before that. Make sure you jump in and watch that. The amounts are different and the options are a little bit different in 2026 than they were in 2025. You can't quite use the same catch-up strategies. We got to adjust. You can thank the government for the Secure 2.0 Act for that. But you can use a Roth IRA or a Roth 401k strategy is a way to save money now. You already paid tax on the dollar that went in, and then whatever we turn those gains into, we never have to pay tax on those gains again, right? So we want to utilize that strategy. We want to max that strategy out. Next is utilizing an insurance-based strategy to grow your income, and then we're able to move money out of the insurance policy completely tax-free. The way we do that is through a loan strategy, right? So loans don't require us to pay taxes because I borrowed the money. So in the insurance strategy, I'm borrowing money from myself that I'm using as income for myself. The insurance company is using my policy and the cash value inside of my policy as collateral, and I'm able to use the money and do whatever I want to do. When I die, they take that out of the death benefit, settle up with the insurance company, and my beneficiary gets the difference. I can move money in and out of the policy as I so desire. I can put that policy together in a guaranteed way where the insurance company is going to give me a guaranteed rate of return. I can put that money in a strategy where I'm going to become an owner. The insurance company is going to give me dividends or part of the profits. I can put that in a strategy where my money is going to be indexed to the S&P 500 or the Russell 2000 index, and the insurance company is going to share with me a portion of the returns that they get from the market, or I can put my money directly into mutual fund units, and I can buy funds inside of my policy strategy and deal with the ups and the downs of the market myself. Either way, as that money accumulates inside of the policy, I'm able to borrow against that strategy, use that money for retirement income purposes, right? So the goal is to put together that first portfolio piece, get yourself to that $2 million mark, and that way you're in a position to be able to generate $120,000 to $160,000 a year in income. And so if I move those dollars into strategies that are going to get me 6 to 8% return, and then I'm able to generate the income that I'm looking for completely tax-free. Now, I'm not saying that you shouldn't use qualified plans. You should have money in your qualified plans. If your company has a match, so if you put in $1, they put in $1, get all the free money that you can. What I'm saying to you is if they offer you the option of a traditional 401k or a Roth 401k, take the Roth 401k option. If it doesn't have the match, then take the other 401k option that has the match, because free money is we got to get all the free money that we can get. What we want to do is we want to help you build out an overall portfolio that will take care of all the 3 investment bucket strategies. If you don't know what all 3 of the investment bucket strategies are, I did another video on it. Check it out. It's on the popular list. You can go and check out the 3 bucket investment strategies. We want to have representation in all 3 buckets. We just want your tax-free bucket to be the biggest. Here's why. We can't control taxes in the future. And so if we have a bulk of our money in an environment where we're going to have to pay taxes in an uncontrollable tax environment, you're not financially free. You're not financially free until you have your bulk of your portfolio out of the government's tax system, where you don't have to worry about them coming in and changing the rules on you on the back end. We want to help you put that together. If you want to book a session to get your free freedom number, right? Your freedom number is how much money you need to save on a monthly basis to get you to that $2 million portfolio. Here at ARC Financial Strategies, we will tell you exactly what that number is, and we will also give you a step-by-step plan in order to help you get there and achieve that success. We want to make sure, encourage you, subscribe to the podcast. Make sure that you're getting all the information. We got a big announcement going to be coming out in the next couple of weeks before we round out 2025. We're going to be introducing and giving you an option to join us in the school community, where we're going to share more details, deeper dives. We're going to dig into this content a whole lot deeper. I have more time to talk to you and share with you. So be on the lookout for that new piece of the puzzle. Remember, tax-free income is the best income. Thank you so much for joining us today on this episode of Freedom Ain't Free, where tax-free income is the best income. We'll see you next time.